This video is a replay of a trade I took today. Now, it probably goes without saying, but I'll say it anyway. I am not a financial advisor, and trading entails risk. Just because I got these results today doesn't mean that I can get these every day, nor that you can. Remember, the entire premise of the investing project and the $1 million experiment is that I am not an expert, and yet I am learning how to do this. So for heaven's sake, don't just blindly copy me. Instead, find a mentor, someone who is an expert, and join their community. Pay for their mentorship. This approach has worked very well for me, and it likely will for you too. So use this video partly as education and partly as inspiration. After all, if I can learn this, you can too. Hello, everyone. So we had two trades today. I'm only going to talk about the first one in this video, and I'll talk about the second one in the next video. I want to keep them separate because one was a very bad set of decisions on my part. Shocker, if you've been watching any of these videos. And the other one was a trade that did work out because I made somewhat better decisions. I want to keep them separate because each one has some lesson value, and I don't want to just wash out in an aggregate total. So the first thing I did, and this is the bad one, was I decided to trade the ES. And so let me share with you, so you can see the ES here. I'm going to zoom in on the 5-minute first. That's this. Okay, so we're right here. And so we've had a number of red bars as we're heading down, and you'll notice that these bars are quite steep. So relative to the ascending bars over the pre-market hours, and then suddenly the market opens and there's a substantial sell-off. And so what did I do as a result of that? Well, I waited for the first green bar and then went long. Now, I need hardly tell you, given that this didn't work out well, that it didn't work out well. So let's give it a second here, and I'll narrate why. Actually, let me just go in and share the joy here. So where are we? 22 seconds left, 16 seconds. So I'm going to go in and just place my buy order where I had placed it, which was at 71.83. Is that where I am? Yes, it is. All right, so let's go in. So you see this. Now, just based on just looking at this alone, you'll see that this was a very steep sell-off, and getting the very first green bar, that's generally not a really great idea. You want it to build a bit of a base here. I ought to know, I do know that. Nevertheless, I didn't trade that. But the other thing is, if you zoom out a little bit and look at this, we're right in the middle of the pre-market range. In fact, we're a little bit closer to the high than the low, and I am going long. So this, but this is right in the middle. This is a classic case of trading right in the middle of the range. There's no high probability because it's low to the bottom end of the box and going long, and there's no probability. I'm not going short, so it's not like I'm near the top of the box going short. And so all in all, this was a right smack in the middle of the average true range. Like, this was not a high probability trade, and I took it anyway. So let's go ahead and take it. Let's enjoy the travesty that was this trade, and then I will. And then I'll show you why I should have known better. Oh, I had to adjust this 2, 3, 4. I had to adjust this to give myself 3 handles of room below the low. That makes it a 19 handle risk. And you can see right away, as soon as it took off, as soon as I was into the trade, it just never returned. It was like a bad idea personified. Anyway, let's let it go. This is my punishment, by the way, is forcing myself to watch my trades that that lost in real time and then watching it again in the replay. It's like, yeah, it doesn't get any better. I think my secret hope is that if I watch this enough times, I'll eventually say, yeah, you know what, don't do that. So, and so we're down here and we're out. And so we had a $190 loss for taking a trade that was not great. Now, let's zoom out and let's actually look over here. This is the classic look left. When you look left, and by looking left, I mean you can either scroll all the way left, or you can just, if this is the 5-minute, which it is, you can just look at the 15-minute, because that gives you more of a look left, and you can clearly see that back here in the after hours, pre-market hours, you can clearly see that there was support here. It was selling off to a point where there were enough buyers here that it forced the price back up. Obviously, right in here in the middle, where were there buyers? Where was there any reason for me to believe that there was support there? Like, bearing in mind, I bought this at 71.83, so I was right here. if I put this in 71.83, I was right here where this little blue line is right now. And where was their support? There wasn't any. This was a classic case of a bad location, and a little bit like buying and trading in real estate. Location is everything. Location, location, location. And if it's a crappy neighborhood, don't go buying a house there. Like this is not hard to figure out. Anyway, apparently it was hard for me to figure out. So that was a bad idea, and I paid the price for it. Now, the thing that's interesting is when you look at this level that happens to be low of day currently. If you look, let's just look left a little bit here. Where was there? There ended up being support coming up pretty quick. Let's just let this go for a few more seconds here, a few more minutes perhaps, and you'll start to see the 15-minute candle start to form. And let's just see what this looks like. Because there's a point where it starts to not look terrible, and you can see we're still doing it. Yeah, you can see here on the 5-minute. Yeah, okay, it's not trading off with the same energy that it was. It's starting to kind of form a little bit of a base. It's looking like, at some point this might be more acceptable. Still, there's no signal. There's still no buy signal. Now, if I really wanted to, I guess if I really wanted to take the second 5-minute, I could have got in here. But I have a personal policy that if I get stopped out of the 5-minute, then I'm going to require myself to have a 15-minute setup for the next entry, and I don't have that yet. And the reason for doing that is that it means the 5-minute it whipsawed me out. I got faked out. I want something with a higher probability. That's why I increased the time frame. So I'm now looking a little bit more at the 15-minute as this is playing out. And so what are we doing? We have 6 minutes left in the 15-minute bar. Let's let it go. You can see in the 5-minute bar, it's not selling off with as much energy as it had been. And we are a minute and a half left in the 15-minute bar. And where are we? Okay, 15-minute bar has just closed. It's green. So the 15-minute bar setup would be right here. And I did not take this, by the way, and I will explain why in a second. But right around here, 71.78, that would have been a legitimate setup for the 15-minute bar. But now let's talk about location. Because back up here at 71.83, we know the location was crappy. But let's go look at this location here. It's still not at the bottom end of the box. I would have preferred that, but you don't always get what you prefer. But when I look at this, I'm seeing, okay, I see a bit of a wick here. Okay, oops, that's not what I meant to do. There's a bit of a wick here. It's pulled back from this area. It's pulled back from the same area a couple of times earlier. That area acted as a resistance even before that. So it's not nothing. The area is not insignificant. You can see that there's some significance to that. It's an overhead resistance and then underhead support. And so it probably would have been a legitimate entry to get in here at the 71.78. So if I'd looked left and really waited for some more base to form, this could have been a much more probabilistic, much more likely trade to be successful. As it was, I made a mistake, I stopped out, I lost $190. Now, in the next video, you can see what I actually did do, which was I went long on the NQ. And the reason I went long on the NQ instead of the ES is that, this big area of support that I would have liked the ES to get down to, well, look, the NQ is right bouncing off that level. There's a lot more support there. So I figured the NQ was a higher probability trade. And you can see that level had been support for NQ for a while. So this was a much higher probability location. And this 15-minute setup is where I would get in. So that's what I'm going to show you next.